The following is a presentation of TFNN. Trade what you see with Larry Pesavento. Call now, toll free at 1-877-927-6648 or internationally at 727-873-7618. Now, Larry Pesavento.
Okay, folks, looking good, Billy Ray, feeling good, Lewis. We're going to take a look here at the German DAX as we usually do. That's on the 15-minute, as you can see. We've had some pretty good action. If we take a look at this on the daily, you'll see that we almost made a double top here. Probably still could, but we'll have to wait and see if that's going to happen. But we're having some pretty good action. You can see here in the FTSE, the next one we're going to look at, doesn't trade nearly, a fraction of what they do in the DAX. But you'll notice here the FTSE has had some pretty big rock and roll moves today. Most of this started when the somebody did something with interest rates. Oh, was it Germany? I think somebody did something with interest rates in the middle of the night, and that's what spiked everything. The S&P jumped 20 handles, Dow Jones jumped 150, and then in the middle of the night, Draghi, that's probably right. In the middle of the night, they changed their mind, and the markets went down and made new lows over Friday. So we'll see what's going to happen, from these levels. But that's still a little bit early in the day. And being the first day of the week, this also happens to be the start of autumn. This is the equinox, the 23rd of September. Always a very interesting thing to look at. Oh, one of the things that someone asked me to do is to review what we were looking at in that gold yesterday. And on Friday, I'll bring this up here to show you. And remember, this is all time related. It has nothing to do with price. It's, basically what time is related. You can see there around 1 o'clock, 1300 hours, the market was supposed to go higher in gold, and of course it had a really nice $17 rally. And we were doing the same thing, if you'll remember, in the New York Stock Exchange, or the Dow Jones it was, not the New York Stock Exchange. If we'll put that up, it showed that we were going to close near the low of the day, which is in fact what we did, and we mentioned that it had a high probability of closing lower on that day. And the reason why is that's part of the data dependency data that we use when we're working with John Jameson, and that was just a statistic. That's all it was, folks. It doesn't, nothing any more than that. Sometimes they win, sometimes they lose. There's nothing more than that, okay? Someone's asking me, did we see anything last night in the stock market? Well, here's what we were looking at around, I guess it was around, I think it was around 2:30 in the morning. Let's just get this up here to take a look at it. We'll get this up here. This is what we were looking at. You can see the S&P was trading at around 303.50. The high was supposed to be between 3 o'clock and sometime around 4:30. One of those two highs. You don't know which one it's going to be, of course, because you're just taking a rough idea. Well, not a rough idea. It's pretty close. It's got to be one of the two. And if we take a look and see what happens, it occurred on that first one. And it had a pretty good move to the rest of the day. Okay, let's move on to some other things that are important. Folks, the U.S. dollar has had a chance here to hold, and that's a really important thing. Let me get this up here so that we can take a look at it, and you'll see what I mean when we go through this. Here it is right here. We'll get it up here, and you'll see what I mean as you notice here. We made a 50% retracement of the low from way back in June, and it's also an ABCD pattern down there. We marked it at, and we've been here for 6 days, folks. That's a lot of support. You don't see that very often. The euro broke down to 109.070, I believe, something like that. It's still trading below 110 or close to it. But the dollar index has started to move up a little bit. Now, if it turns around and goes back below 97.50, that would be a very bearish sign, because that means all of that time frame during that 6 or 7 days was supply. It wasn't demand. And so that's the key thing to watch here. It's very unusual to see the dollar index. If you'll go and look at the chart back in April, middle, you'll see a 6-day window there where market did very nothing, setting right at the 382 retracement, and then it went up and made new highs. But you don't see those too often, so I think it means a lot. So the range is 98.40 on the dollar index and 97.40 on the downside. Either one of those breakouts, in my opinion, would send the dollar moving in a strong trend and change the direction of the euro. The euro is, we've talked about the euro many, many times. In fact, we ought to just, since we're doing that, we'll just take a look at it. You'll see what we've done here. Let's get this up here to take a quick look at it, and then we'll all look at it together. And keep those cards and letters coming in, folks. The lines are jammed right now, 877-927-6648. So if you get your call in early, you might be able to get on the line. But anyway, you'll notice here that we did get down to that 109.60 last night, and that has held so far a very strong support down there at that 78% level. If in fact it's going to hold that level, we'll take a look at. Hey, we have a caller. Shut the front door and raise the rent from Kansas. Robert, what can I do for you?
Yes, good morning. Thank you for taking my call, Larry. I have a question about TLT, and kind of my question is two-part. Last week I was listening to your show one morning, and then I got distracted and had to go to a meeting or something, but you were talking about the long-term treasuries, and you said if something would happen in that market, and then you said something to the effect that made me think that it was like the bond boil. Can you
go ahead? Did you want me to repeat what I said? Okay. What I'll try to do is, if I forget, I'll just make it up, Robert. No, I remember what I said. Basically, I think that what we're seeing here is a bubble in the bonds, and the reason why is they're talking about this negative interest rate, which I don't think anybody in Kansas would do it. Nobody in Arizona would do it. So to give money to people and then pay them for holding it for you, give me a break. You know, I mean, even a third grader could figure that's scheme out, so that's not any good. But I believe that the Federal Reserve has lost control. Anybody that, I mean, I've been in this business for 60 years, and to think that the Federal Reserve would drop interest rates when we're at a top, at a high level in the stock market, just to make growth, I mean, that just does not make any sense to me. But they've been doing this with quantitative easing now for 7 or 8 years. The money supply doesn't mean anything anymore. It used to. But to me, I think we're looking at a major bubble here in the Treasury bonds. We got a little bit of a pop last night because of some news that came out from Europe, but that's what I'm looking at. I hope that helps. Is that what the answer you were looking for? Okay.
We are on the long-term trajectory's down. What we experienced the last few days is just what we'd call like a counter trend rally.
Yes, this is what we were expecting. I thought that area around 162 would be a little bit of a problem. That's just a little bit below the 50% level. So we could get as high as 163 even in the Treasury bonds, but the notes are acting even weaker. So that's also telling me that this is nothing more than they dropped a lot. Bonds dropped $10,000. Now they've rallied back $3,000. So that's not unusual. I hope that helps, Robert.
It does. Thank you so much.
You bet. Thank you for calling in. I appreciate it.
You bet.
If you're not currently using the Taz Profile Scanner when looking at setting up your trading opportunities, then your arsenal is short a mighty weapon. The Taz Profile Scanner is a standalone piece of software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Headed by Steve Dahl, Taz understands that in today's technological world, the use of top-flight software applications and technical analysis expertise is essential to successful trading in today's market. You also gain access to the webinar that Steve Dahl and Tom O'Brien just hosted, The Best Way to Use the Taz Profile Scanner to Profit. This webinar archive is available for all subscribers immediately upon signing up. All new subscriptions also come with a 30-day money-back guarantee, so you have nothing to risk. Start your subscription by visiting the front page of TFNN.com today, and you'll find the Taz Profile Scanner under the Services tab. Sign up today. Are you in the market for buying or selling real estate in the Bay Area, including the surrounding St. Petersburg, Tampa, and Clearwater markets? Tiger Real Estate LLC is a firm that has extensive experience in the Tampa Bay area. Whether you're looking to sell your current property for maximum value, or you're in the market for a second home or investment property, Tiger Realty has the experience across all areas of real estate in the Tampa Bay area to help buyers and sellers make the most informed decisions across all price levels. From the price you should be paying per square foot in certain up-and-coming areas to the type of cash flow investment properties are capable of creating, Tiger Real Estate can help you make the best decision when it comes to all areas of the market. Before you make one of the biggest decisions of your financial future, call Tiger Real Estate LLC today at 727-329-8322 or email us at tiger@tfnn.com. That's 727-329-8322. Call us today.
Many of our new listeners have heard about The Tiger's Den. The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of the TFNN shows, plus see all of the charts as they happen live and have access to archives of all of those charts. You can test drive The Tiger's Den absolutely free for 30 days and greatly enrich your knowledge of these markets and how to make your money work for you. Details on The Tiger's Den are on the front page of TFNN.com.
TFNN has launched our brand new website. You can still visit us at the same TFNN.com URL, but when you do, you'll see a new and improved homepage with a much simpler navigation, whether you're watching Tiger TV live in high definition or just accessing your newsletter subscriptions. We even have new pricing in 6 months and yearly options. Check out the new TFNN.com now and experience all the upgrades. TFNN.com, educating investors.
Call now, toll free at 1-877-927-6648. Internationally at 727-873-7618.
Okay, I posted a chart in here that was sent to me by one of our listeners here, Mr. TB over in Las Vegas, Nevada, and it's very interesting. It's a monthly chart of the S&P 500. It's from a man named Steve Miller, who I put a call in. We're going to try to get him on the horn this week and maybe share some of his ideas, but he's looking at some major fib extension targets up here. So far, he's showing the 61.8 extension to be down around 1,500 over, but starting with the market should top in 2020 and then be down for roughly 2 years. We'll have him on to talk about it. But there's one thing I did want to mention to you today. As most of you know, that when I went to Europe, it was to at the UK the first week, Sunday through Friday. I spent with my dear friend and one of my students from 15 years ago, and he has since taken some of the things that I showed him and gone to far levels that I'd never reached. And he's a very, very bright fellow, and we had a lot of fun. He trades quite actively, and he only trades just a few things, gold and crude oil and the S&P, but he has some strong indications of cycles, and I mentioned those to you before. I got an email from him, a WhatsApp message, and since I have my new smartphone, I can get WhatsApp, and it was a nice little 5 or 6 paragraph explaining what was happening in the markets. And one of the things that I heard from him when I went over there on Sunday, the 13th of, no, it was the 12th, what day was that? Doggone it, I think it was the 9th. Yeah, the 8th. The 8th we got in, and he said that one of the things that was going to happen here the next 60 days or so would be a major bankruptcy. And now we understand that Thomas Cook, the oldest travel agency in the world, has gone tapioca, leaving 150,000 folks high and dry. And that was one of the factors that he was looking at. But his purpose of the WhatsApp today was the cycle work that he does is all going back to what Plato and Pythagoras worked on, which is a 90-year cycle, and it goes to a 60 and a 30, which is very similar to the lunar cycle and things like that. But just to humor me, if you just took 90 and subtracted from where we are right now, where would we be? If we subtracted 2019 from 90, where would we be? You'll have to figure that one out yourself, folks. And it's also September. Anyway, this will try to get this gentleman on. It's got some really nice things to look at here. He's got some cycles here that look pretty good. It looks a lot different, of course, than the chart that we're looking at when we're watching the S&P. And I don't know if it's going to mean anything or not, but we'll get it up here and let you folks look at it one more time. This is the monthly chart. I'm not going to keep putting this up here. We'll get up here. We'll see. I'm welcome to the real tech world. Hey, listen, I have a hard time answering this doggone phone. I mean, I got to hit a code number. I got to spin the wheel. I mean, it's not like the flip phone. It's not easy. But this is what we're looking at right here. We got a 3 drive to a top pattern. It's perfect symmetry between 1, 3, and 5. That's a 3 drive to a top pattern. And we also have the 1, 2, 3, 4, 5 expanding triangle. All we need now, folks, is if the S&P closes below 2946, the game is on, and we'll see if it's going to be a long game or a short game. But 2946, keep an eye on that one. That should be a really interesting one to look at. Yeah, tiny fingers. Let me tell you, when you got stubby little fingers like what I have, it's a little bit difficult. We had a question from somebody, and since someone called in and asked the question, I'm going to answer it. And I got it, must have been a couple hours ago, but what does Larry do for fun? Well, most of you folks know that I do like to play poker. And I only get to play not too much anymore, but I play a couple days a month anyway. But one of the things that I do on Wednesday through Sunday is I always look to see at the 2 major racetracks that I follow Belmont and Gulfstream. 2 of my students that are professional horse players over in Las Vegas, besides being foreign exchange traders, they do one thing. They taught me how to do it, and it flat makes money. And so I have a lot of fun doing it, and you don't have to spend very much money. $30-40 is all you have to do, and it makes a lot of fun. What they do is, when you go to a racetrack, folks, you probably don't know this, but 16 2/3% of everything that the racetrack bets goes to the state. So you're looking at a 16 2/3% hickey before you ever start to put a trade on. Can you imagine if we had to do that in trading? Oh, that would be pretty tough. But their whole premise is that you don't watch what the horses are doing, watch what the jockeys are doing. And it's not the jockeys that you're concerned with, it's the jockey's agent. And the agent has this valuable asset, a jockey. In this particular case, I'll put this up to let you folks see it. In this particular case, one of the leading jockeys, he's number 2 at Belmont, is Luis Saiz. He's the fellow who won the Kentucky Derby on national security, and then they knocked him down because he supposedly interfered, but he is one of the better jockeys. And if you notice there, he was the 7 horse, and he paid $61.50. He was 30 to 1, folks. Here you have a very valuable asset, and this jockey's agent put him on this horse. Now, do you think he would put this type of a jockey on a horse that didn't have a chance to win, where he could possibly be hurt? Absolutely not. So what you do is you wait for an overlay. In other words, this horse supposedly might have went off at 10 to 1, but now he's 30 to 1. So there's a huge overlay for the payoff. You can see the payoff: 61, 26, and 140. I mean, that and $14 on a $60 bet, that's $900. Well, there's going to be losses along the way, of course, but that was the whole premise of it. So I watched that, and I have about 3 bets a week, and I make money almost every week. I mean, I have a few losing weeks in there, but not a lot of money, enough to go out and buy a taco and stuff. But it's fun. I like it, and it keeps me informed with my buddies over there, Bob Alexander and Alan, and it makes it a lot of fun to look at it. But they bet huge amounts of money. They'll bet $500 to $1,000 on some of these horses, and they make a considerable income doing it. But it's it's all based on the probabilities, and that's all it's really about. And if you follow the probabilities and you study the business like you do trading, you'd see that there's same numbers there that you have in that. So that's one of the things that I do in my home in my spare time. Of course, now getting ready for the winter months, I'm getting ready for the Ironman competition here in Tucson, which will start in late October. I finished 4th last year, so I'm hoping to make my debut into the top 3 this year, because it's a great Ironman competition. We hit Taco Bell, Burger King, and McDonald's. If you can hit 3 of those, then you're in that triumphant, and you'll be able to pass the Ironman competition here in Tucson. Okay, let's move on to a couple other things that people. We got a break coming up here, and then we want to talk a little bit about some of the markets that are jumping around, like the currency markets and the gold market, and some of the others. So we'll try to get back to that when we come back from the break, because I think we're at some pretty critical levels in the market for gold and stuff. Let's get this up here, and we'll take a look at it. And then when we get back from this, we'll talk about this. Is what we were looking at over the weekend in the 24/7 newsletter. We were looking for the market to make a high around 1529, and I think that's been the high so far today, maybe a little bit higher later, but that's what we're watching here. And we'll talk about the gold when we get back from the break here. If you do have any questions and you'd like to get in, 877-927-6648. We have one line open, so hurry.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened, and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service, Fibonacci 24/7, is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters. The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN, and you'll find The Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now. TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Okay, folks, just for tears and giggles, I just want you to humor me a little bit here. This is a transport weekly chart going back to 2013. You can see the big ABCD patterns that are there. You see the head and shoulders pattern, very nice head and shoulders pattern. The 33 weeks from high to high, perfect. The right shoulder, lower than the left shoulder, so that makes it perfectly. And then you'll see that it topped in September of 2018, and it's been in the downtrend ever since. It pulled down to a 61% retracement right to the tick there on December 26th when we made that major bottom. We had the rallies up. We've had 3 attempts to break through that level. We have not been able to do, and so it looks like it's pointing to the downside. Now, what's interesting about this is we've had new highs, of course, in all the indices, with the exception of the Dow Jones Transportation. Back in the old days when Richard Russell was around, this was known as a major divergence. The reason for that is transports is how they move the goods. This is how they get the goods from one place to the other. Now, it could be that maybe Amazon's taken over everything. FedEx, UPS, the United Postal Service. I don't know, but this is not acting very good. They haven't taken over the railroads yet, but they might soon. But so anyway, that's the theory behind it. Now, whether it works that way or not, I don't know. All I know is that for sure, just looking at this S&P on a monthly basis, we've completed about a perfect symmetry, as you can see, in a 3 drive to a top pattern, and that's the one that is, very, very important, at least from the standpoint of, watching these things unfold. If you'll, just going to bring this up here to show you again, we'll go back a long ways in the history, go back about 20 years here, and we'll bring this up here to let you folks take a look at it. And if you want to, you can, defy human nature and go back and look at some of these things yourself. But you'll see in 2000, you'll see the 3 drive to a top pattern. That's the first red arrow on the left. Then you go to the dot-com bubble. You can see another 3 drive to a top pattern. That was a third one. And look, lo and behold, look what we have now. And look where the market is compared to those areas. From 1600, now we're at 2700. And that is a perfectly symmetrical 3 drive to a top expanding triangle. And whether that means anything technically or not, I don't know. But this chart was last updated by the folks at Macro Trends, and that was done in April. Oh, maybe it's April Fool's of this year. And now I imagine if they updated it, you'd see that the top of that green line has been touched by the prices to make that a perfectly symmetrical pattern that we're watching. And I remember all of these. Ruby, you're asking me to look at the cattle and hogs, and I will be happy to take a look at it because you are one of our favorite folks here. You're always asking great questions, and it gives me a time to open it up here. All I have to do is to get up here, and we'll take a look. Oh, shut the front door and raise the rent. Give me a second here. I hit the wrong button, and when I hit the wrong button, we're going to start out with the little piggies. By the way, we have some great news, boys and girls. You're not going to believe this, but Mr. Rogers, the boys at the CME Exchange, guess what? They've come out with a bacon ETF, an ETF for trading pork bellies again. Shut the front door. Billy Ray Valentine is coming back. So anyway, look at the hogs should have some pretty good support down there at 6,300. Whether it's going to continue that way, I don't know, but that's what it looks like in the hogs. We got Mr. Z on the line talking about the Lone Ranger's favorite subject, silver. What's up, my friend?
Well, I need to correct you. Billy Ray never left. He's been trading OJ ever since the 80s.
He certainly did. 83. They cornered the market. What can I do for you, buddy?
I wanted to ask you, Larry, about the silver price pattern here just in the past 3 weeks. Just full disclosure, I'm long from Oh God, I don't even know where I'm long from. Somewhere under 18 late last week.
Well, you were buying it at 14.20 too, so you were long from a long time ago, my friend. We appreciate that.
Yeah. But very specific question for you, please. Silver topped a couple days after Labor Day up at 1975, and then we hit a low at 1750 a week ago Friday, and now we're rallying up off that low, but still far underneath the high. My question to you is, can you show the price patterns that you're looking for to trade off of short term? And secondarily, Larry, could you share with us what your guess is regarding this question? Does this current move up of a buck the past week or so, does this move run back up to test that high, or is this something likely to fail?
John, if I knew that, I would probably be doing a different job. I really don't know, but I will tell you this. Let me show you the 4-hour chart here in silver. You commented about that number up there at the top, which was 1970. That was the 78% level to the tick on the long-term weekly chart. But the most amazing thing, John, is if you look at the price level, we came down from 1970 down to 1746.50. Now, that does not fill that gap that's over there on the 25th of August, where we gapped up on that Monday morning. We did not fill that gap. That, to me, was absolutely amazing. And that's why we've had these higher bottoms in here, and I was so bullish on gold on Wednesday, or Friday, is because we were seeing the same bullish pattern in gold. In fact, it was even more bullish because it didn't back off as much. So my assumption is we've gotten as high. Have we been to 1860 yet in silver, John, today? Do you know?
That's basically, yes. We got there about 10 minutes ago.
Okay, so 1860 was a 61% retracement of that move. So if it's going to stop, it's going to stop between 1860 and 1875. If it's going to stop there, that's what I would think it would be doing. Now, whether it does that or not, it doesn't always go along with what Larry thinks. But technically, that's what I'm seeing as I look at this. That it has got a really good. It should stop at that level. That's going to be the key. We get above 1890, and boy, John, you know as well as I do, this market had a huge run, and then we had a 10-day correction, and it couldn't even fill that gap. That is potentially, I couldn't believe it when I saw it, John. Half a cent. It couldn't fill the gap on silver, half a cent. I was shocked. And I don't get shocked very often. So that's what I'm seeing here. It still looks. I just sold the long gold that we had over the weekend. We just got out of that at 28, and we're looking to see what the pullback will be. But anyway, that's what I'm seeing. Can
I ask you on that? Just as long as you mention that.
Yes.
And I'm strictly asking the question as a trader. Gold is in a raging bull market. The bottom occurred, 13 months ago, down at that 1160 mark. We pulled back in the past 2 weeks, of course, and now we've bounced up. And you bought it, and you just booked gains, and I bought it. I'm still hanging long. So my question is this: since this has been a raging bull market, why do you choose to get off the horse here this morning? For a $20 gain or whatever it is. Why do you get off as compared to saying, this is a fucking Bronco, and I'm just going to stay on board this puppy?
I will answer that when we get back from paying a few bills. Okay, John?
Thanks so much.
Okay, you betcha. We'll be right back, folks. 877-927-6648, and we will answer.
If you're in the CD market and looking for a secure investment, the Tiger First Mortgage Program may work for you. The security for these first mortgages are building lots in the Tax Opportunity Zone in St. Petersburg, Florida. The Tax Act of 2018 set up tax-free zones across the country where you can build and hold for 10 years and pay no tax on the profits, which makes these lots valuable. The investment is anywhere from $30,000 to $75,000. The interest paid is 7% yearly, paid on a monthly basis. According to Bankrate.com, the best rate for a 4-year CD in the country as of February 20th is 3.1%. A $50,000 investment at a normal 4-year CD rate of 3.1% would give you income of $1,550 per year or $6,200 over the 4-year period. That same $50,000 investment in the Tiger First Mortgage Program would give you $3,500 per year or $14,000 over the 4 years. Which would you prefer, $6,200 or $14,000 of interest on your investment? If you would like more information about the Tiger First Mortgage Program, you can call me at 877-518-9190. That's 877-518-9190.
If you're a trader in the market looking for exposure to gold or gold mining equities, then now is a perfect time to sign up for Tom O'Brien's Gold Report. The summer is over, gold is trading back above $1,500, and the 10-year Treasury is hovering at around 1.5%. Tom O'Brien has been writing his weekly gold report for almost 18 years. There's no one that knows more about how the gold market trades and how gold mining equities react. New subscribers get a 30-day money-back guarantee, so you have nothing to lose. Every Monday morning, Tom publishes his weekly gold report with coverage of gold, silver, bonds, the XAU, HUI, GDX, the dollar, as well as more than 30 different mining equities. As of September 3rd, Gold Report subscribers have 5 active open positions with an average unrealized profit of almost 38% for each position. To see for yourself the types of profitable trades that are recommended within the Gold Report, sign up today by visiting TFNN.com. Will the S&P 500 continue to climb? For bold trades on U.S. large-cap stocks in either direction, trade SPXL, SPUU, or SPXS. Directions Daily S&P 500 Bull and Bear Leveraged ETFs. Direction Leveraged ETFs. An investor should carefully consider a fund's investment objective, risks, charges, and expenses before investing. A fund's prospectus and summary prospectus contain this and other information about Direction shares. To obtain a fund's prospectus and summary prospectus, call 866-476-7523 or visit directioninvestments.com. A fund's prospectus and summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
The Bull Bear Binary Option Hour. Next on TFNN.
Okay, Ruby, we'll get to your question on the Christmas cattle here in just a minute, but let's finish this up for Mr. Z. This is a 4-hour gold chart, folks, and as you'll see, they made a 382 retracement there on Friday, and had that big move up, and of course, once it went above 1514, in fact, we were talking about it on the air, once it went above 1514, it was going to have a pretty good move. The target was 1530. We got to 1529.70 so far today, and that to me is a completed move. The reason why I'm not looking for these monster moves is because what happened from September the 4th down into September the 10th. I don't want to set with a $70 hickey. Even maybe I bought this thing way down at $14.40 or something, but then I'm going to set with a $7,000 decrease in net equity. I don't like to do that. When I went to work for Drexel Burnham, the very first day that I sat there in the office there in Beverly Hills, they said, we have a very unique clientele. They are accustomed to making money. They are accustomed to losing money. The one thing they're not accustomed to do is losing all their money. And as long as you don't do that, you're going to do just fine. And I tried to never have any draw down more than 25%. I got very lucky because I started in 1976, when silver was trading around $5 or $6. Gold was trading at $210, I believe, something like that. And I was very bullish for the next 6 years, and it did pretty well. But I did catch some really big moves during that time. But a lot of these moves were like this. I watch these patterns because they repeat over and over again. But the key here is, look, we've got a price of gold right now at $15.24. You're looking at that's a $152,400 contract, okay? And I can trade that for $7 an ounce, $700. So the amount that I have to risk risk at that point is very, very small. And that's what I focus on. Not how much money I'm going to make, but how much money I'm going to not lose. And that's the whole key, is focus on how much money you're not going to lose, and you're going to be far, far better than how much money you're going to win. I do catch some nice moves. I missed this gold. I missed that whole $150 up, actually $200 up, and it's bothered me ever since. But I know I'll get it back eventually. Didn't lose anything on it, but we made what, $75 and gave the rest back to the. Didn't get, we never got back in. We missed the buy point by $2, and I didn't chase it because I don't like to chase it. But that's pretty much. I hope that answers the question, Mr. Z. But it's mainly because I'm risk averse, especially at my age right now. I don't want to take any wild chances of taking anything, hurting anyone, and I won't do that because of my respect for the O'Brien family and stuff. I don't like to take big risks. Might miss a few here and there, but that's pretty much. Let's take a look here for the cattle here for.
Thanks very much, Larry.
Oh, I didn't know you were still on, John. I'm sorry. Yeah, shut the front door and raise the rent. I'm sorry, John. Didn't know you were still on. Anyway, this is the cattle. You see, we made a double top way back in April. We came down, we made a 382 retracement. You see that move? We went from the 28th of May up into the 20th of June. We rallied about $6. Uh-oh, I think we've lost, I think we might have lost, shut the front door and raise the rent. Am I still on? Yeah, I guess I still am. Yeah, I think I'm still on. Yeah, still on the air. But anyway, you'll notice here that we've had a really nice run here in cattle. We went from 98 to 107, and we'll pull this down here. I'm looking for a little bit of a pullback here in cattle. If we could get them down to about that 101 level, be a 61% retracement, Ruby, I think there would be a pretty good chance, to take a look at it from that level. So that's one of the main things, that I'm looking at as far as that. We got knocked off of that, so we'll see what's happening with these things. Folks, hey, don't ask me. Don't ask me any questions about politics, because I focus on bar charts, and that's basically, all I'm really looking to do. Let's one other one that we want to watch here, because we're getting very close to it, and that is this natural gas. There's a big contract, I guess, blooming today, so that China will be able to buy natural gas from us. I don't know the details. I just saw a flash on Bloomberg, but we had this really nice move. If you remember, Mr. Z was very, very bullish that down there at 210, and we had that nice Gartley there at 213, and nice little ABCD pattern there, exact 618 retracement. We had a heck of a run. I mean, it went at, 11 or 12 days, 13 days without even backing off, and now we're in a 6-day correction, and we're going to be coming into really important support there, folks, at 246 in the spot month. I'd be going into December now in that natural gas, so watch that natural gas at 246, because that's going to be near those old highs we had back in July, and it will certainly be a very interesting one to look at. So pay close attention to the natural gas. Those of you that follow the 24/7 Fibonacci newsletter that I do for TFNN, we're watching that very, very closely also. And of course, Friday is a new moon in perigee, and you'll never guess who we're going to have on the air on Thursday. None other than Norman, who calls it to the minute Winsky. He'll be on to be our speaker here on Thursday to tell us about, what he's looking at in the market, which is always interesting. But today is the equinox. I remember one of my most memorable trips was when I went down to Mexico, and went to the pyramids there, and it was really amazing to see when the top of the when the sun hit the exact at noon on that day, the shadows of the pyramid along the 45-degree angles looks like a snake going out into the jungle. It's how they could do that, I have no idea. But it only happens on one day of the year at noon. It lasts about 20 minutes, and there's only about 250,000 people there. And but it's really something. It's Chichen Itza is the pyramid just south of Cozumel, and it's really spectacular. But it only lasts about 20 minutes, and boy, there's a lot of people down there. So I still think it's relatively safe to see that. So we'll see. Okay, let's talk just a tiny bit about those. Yeah, it's all about mathematics and geometry, folks, and boy, the more I look into it from my friend over in the UK, it's truly amazing the work that he does. It's just it is so accurate that it's just really amazing to see, what's happening with some of these things here that are going on in the market. All right, let's move on here to the grain markets. We had a situation where we've had the corn bottomed right where it should have. We had a nice little run in corn. Beans are pretty strong this morning. I don't know the reason behind it. Could be whatever. Wheat came back from a little bit lower low, so we're going to be keeping an eye on that. But those are just a few of the ones that we're watching here today. The oil market. Look at the oil market, folks. We went down and we got below that $58 a barrel. We got down below 57.33. That's where we should have held that level, and then we're going to see if it's going to be able to, give us some type of an indication that maybe, just maybe, that we might be in an area where, the oil market might be, looking at a little bit of a bounce, because I think that was a short-term bottom down there in the oil a little bit earlier today, and we'll see if that's the case. So we want to watch that. Wow, the old clock on the wall tells me we've got to pay a few bills in a few minutes, and I think I just posted a new chart. I hope that one pops up, and then we'll be able to see it. We got a new. I think the music's coming up here pretty soon. We'll have to wait. There she is. We'll be right back, folks. 877-927-6648.
I'm certain you are or strive to be one of the best at everything you do in life. It's the most common trait that we tigers and tigresses share. If you're looking to become the best of the best when it comes to managing your money, let me teach you to do what most wealth managers tell you can't be done, which is how to time the markets. I'm Steve Rhodes, author of Mastering Probability, and for the last 12 months, Timer Digest has been tracking my newsletter signals, which have earned me the ranking as their #1 market timer in the nation for the S&P 500 for the last 12, 6, and 3 months. Timer Digest also ranks me as the #1 market timer for gold as well. The fact is, markets can be timed, and I'll teach you the exact set of tools that I use that has transformed me into one of the best at what I do. Sign up for Mastering Probability today by clicking on the newsletter tab on the homepage of TFNN.com and get immediate access to workshops where I take you step by step how to use an extraordinary set of tools, as well as provide great market calls too. Sign up today.
If you haven't checked out the newsletters page of TFNN.com, what are you waiting for? All of the TFNN newsletters are informative, up-to-date, affordable, and a must-have for every trader looking to gain a competitive informational edge in today's markets. TFNN newsletters cover every aspect of the markets to offer you the very latest in market news. Plus, new subscribers get to test drive our newsletters risk-free for 30 days. From all aspects of the markets, including stocks, bonds, metals, commodities, and tech, there's a newsletter to fit your needs exclusively from TFNN. Stay informed each day you trade and get that competitive edge that will help you stay ahead of the game. Visit our newsletters page by going to TFNN.com and click the newsletters button near the top of the page. TFNN.com, educating investors.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Okay, folks, I posted a chart for the German bond. You can see the big move that it had. That was related to the comments, I guess, by Mario Draghi from the ECB, European Central Banks, but I don't know or anything about it because I don't follow the fundamentals. All I heard is that's what it was. You can see that it had a nice move. It trades just like the rest of the markets that are active, and but it basically that's what you're watching here. There's a lot of talk, of course, about the Fed repo rates that are going on, and that's a possibility of something going here again. Most of it's fake news, is my guess. So we'll be able to see, yes, when the Fed speaks, gold spikes. So we're right up here to that number we're waiting for, folks. 1530 is the number that we looked at in the gold market that I showed you just a little while ago. Whether that's going to mean anything or not, I don't know, but that is an ABCD pattern that we're looking at in the gold as we speak here. So whether it's going to mean too much or not, let's just get it up here so we can quickly take a quick look at it so you can see it just a little bit easier. There we go. We'll get it right up here and end the show in that vein to see if it's going to get there. But there's the number. So it's made that high. Well, we're really close. We'll see if it means anything or not. Who knows? Anyway, that's just an ABCD. Sometimes they work. Sometimes they don't. And sometimes, they just go totally awry. That's the way the name of the game is. So pay close attention to it. One thing that you should remember, folks, I want to show you this chart because I think it's very important. This is the banking index. We've had a nice rally here. We've not taken out the highs of July. We've not taken out the highs of April. And, this thing topped a year ago, February, folks. This is not a sign. The banks are not having an easy day right now. And I don't know if it's because of negative interest rates or not. I believe negative interest rates are all total baloney. But remember, I could be full of baloney too. And many times I am. So just remember that. It's all about probability. Sometimes you win, sometimes you lose. You got to pay your money and takes your choice, keeps your risk as small as possible, and don't take the losing trades. That's the key to winning, folks. Don't take the losing trades. If you're interested in that, I have a special course coming out, $50,000. It's been sold out. We'll see you tomorrow, folks. Live every day in an attitude of gratitude, and may God bless.